What's up, man?
Dude, look at you, man.
I can't hear you. Well, Ted Brown, digital onboarding. I've known Ted for a long time, back to your account opening days. Your backstory will probably answer this, but I'll just start off with the cool concept that I don't think a lot of bankers get. The difference between account opening and onboarding. And if you want to give your background, you can probably answer that just with your life story, man. You get it better than anybody else.
Yeah, probably could, I guess. So I started off early 2000s with a company Andera. And back then we were really basically inventing the way to open up your bank account online. You know, believe it or not, in the early 2000s, you couldn't even do it. You had to walk into the branch, fill out the paperwork, show your ID to somebody. A lot of people, call that onboarding. So to me, onboarding is everything that happens after the transaction to make sure that that member customer is productive with the organization.
Well, that level of engagement is what really, that's where you see the cost savings of moving to digital, right? I mean, it does no good to, okay, I got the account open, the guy never uses it. Now he still comes in the branch, writes checks all day long, and I'm just ranking up my money, right? Mm-hmm. And if I can get those savings and increase the onboarding, that's the magic sauce here. Mm-hmm. And you're so right in the fact that new account opening, as important as we all know that is. It is. Once you get these guys into this digital channel,
you want to make sure they don't walk out the door.
That's it, man. Get them
in the front and out the back.
Fanatics, right?
Yeah.
And by the numbers, that's what they've been doing, particularly in the digital online channel.
Can you give us some numbers? I mean, do you have any idea, before you came along and invented basically the cool way to do this, what were we looking at? 10% adoption or something?
Well, Ted and I have talked before about and a lot of bankers know this, you've got like your key rules of your sticky features, right? Bill Pay is a good example. Online and mobile is a good example, right? Get them into a checking account. Direct deposit's the holy grail, right? So what do you guys work off of as the key focuses?
Yeah, well, some industry stats for you: 25 to 40% of checking accounts are closed in the very first year that they're opened. But that's a blended stat, meaning that includes the people who walked into your branch, grab a cup of coffee, talk to you, you walked them through, you signed them into online banking, you helped them download the app, like you spent an hour with this person. If you start to isolate it to just the digital accounts, we've spoken to banks where their first year attrition rates for the digital online channel, particularly out of footprint, so that means a household where there's not a branch nearby, first year attrition rates are north of 90%.
Good.
So right. It's just astounding, some of these numbers. And it's been a problem that's been growing. And part of that is because how we started this conversation. People think of onboarding as the account opening process. But we've been measuring success the wrong way.
Love it.
We've been measuring success as account opening as an industry, and we really need to measure success as active users, true banking relationships, and then really looking at primary relationships and profitable relationships.
This is one of the things that I talk to people about a lot, that counting number of downloads as customers is it's such a ridiculous statistic. I mean, you're shooting an arrow, yes. Man, you're guessing, right? Yeah. And there's two kinds of bankers out there: the kind that are like digital onboarding all over it, man, and the others like digital. What's digital onboarding?
What's the difference?
Okay, right. And that's really what I wanted to bring everybody to today, was to meet Ted and meet this company and understand this is a significant advancement in how we're going. This is the stuff 10 years from now, everybody looks back and goes, can you believe they were so stupid they didn't get that?
Right.
And that's really what you guys have brought to the table by, behavioral characteristics of people, how to make, how do people think, what behavior. I mean, we put a lot of science and thought into this and to make it work.
Well, is there a lot of content documentation, right? I mean, I'm thinking about everything from mailers to newsletters to videos and how-tos, and you guys manage a lot of that content stuff for the bank too. Is that right?
Do you pick things up like in an abandonment process to re-engage there and things like that?
Yeah, definitely that. Definitely pick up abandoners and re-engage to get them to complete the process. That's a good use case. But you bring up mailers, so that is the traditional way. Is someone opens up an account on your website and you trigger a mailer in your core, and a couple of days later a postcard shows up to tell you about online banking. That doesn't make any sense. But that literally is the standard of care for a lot of institutions. Yeah. And what they've turned to. And again, just comparing that, what every banker knows what happens in that face-to-face branch. And you're trying to replicate that with a piece of paper, like a welcome letter from the president and a postcard. What we're building is a completely new experience. It's a completely new thing that hasn't been available before. So I think it's a critical area for banks that they can leapfrog in other ways, where we kind of frankly let our bankers down. I think from the technology side, we've let community bankers down. It's not like bankers have stopped doing their job. They're still great bankers. But we as technology partners, in so many different ways that we could point to, have dropped the ball. But in this one specific area, which is a universal problem that I guarantee everyone in the space is faced with, how do you deal with the shift from face-to-face interactions to digital interactions, and create an engaging process that converts an account opening transaction into a true profitable relationship?
Do you think that the challengers are good at it? The chimes, in your view, right? Think about Coinbase, name off one of these, and we've all got one on our phone, right? If not multiple. And we see how they do it, and it's a lot different than your typical bank would, right? Do you feel like the challengers have it down, and it's banks need to have it down, or is there still some opportunity there where nobody has it completely figured out, and this is a good, to your point, a jump?
I don't think they've cracked the nut on this. I do think that they've done a lot of other things really well. Digital app, digital experience within the app itself. And again, a lot of that's because they built it within the last 10 years and tech's gotten so much better.
Marketing journeys, things like that. Yeah. They're doing it.
But I guarantee they still struggle with this conversion from interest to full banking relationship, like engaged user. Well, even on top of that, if you just look at what the challengers they're serving, very narrow at this point in time, very narrow uses. So checking,
like a debit card app, right?
Yeah. A new debit card for your wallet. Yeah. And they've done a really good job at that. They've done a much better job than traditional brick and mortar of getting a user to use the debit card when they swipe it. So kudos to them in that regard. But that's not
when you're running 75% loss of onboarding. It's like a lot of marketing went down the window.
Yeah, it's huge marketing.
We know it's easy come, easy go, right? So if you don't serve a household holistically with multiple services, which none of the challengers are very well suited to do, they'll get there, I'm sure of it.
Man, I got to tell you, I'm so damn excited to be on the phone with you today and do this thing, because we work with a bunch of different companies. You probably didn't know that. Right? We work with a whole lot of companies. Of
course, Ted knows that.
And we get to see what they're doing, and they want advice or feedback, and like you say, as you see the technology progress, it's like to put in a phone number and half the stuff's ready to go. There's plat engagement or other things that are going on that are really kind of beefing the game up, and all this is really neat, but it does not address the issue that you're here to talk about, which is the finishing. And so, okay, hallelujah, we finally got to the point where the guy got the account open, but now we have to fund it.
Right.
Each step in this process until, like say, become a full-blown fanatical digital
true believer, right?
Yeah, a true believer in the digital experience, right? And that is a hell of a jump from where we focused all of our efforts and all these companies on that front piece of how do we open this thing without having a guy come in the branch. But we haven't really thought through very well until you guys showed up of the most important part is how do I fund that account? How do I get them active in that account and really begin to start that user journey?
Is a lot of that education, is that I would imagine a big theme?
Education.
Tell everybody how you do it right
Do you
here.
have the secret
Just
sauce?
tell us everything
The family
and-
recipe, real
And
quick.
get your pencils out.
Yeah.
Right.
Education and removing friction. A lot of these things have a lot of friction points that you wouldn't even think of. The number one is that people just can't remember their account number.
Yeah.
Particularly if you open it online, flash it on the screen, you didn't memorize it or write it down, you don't have it, and you end up needing that for a lot of these follow-on to actually bank with the institution,
Mhm.
to set up direct deposits, to engage with digital banking. So there's a lot of little simple things kind of within that as to why does someone take the time out of the day to open up an account and not use it. So friction is a big part of it, but that's one of the biggest parts that you can solve with digital tech. And that's one of the biggest areas where we can improve and solve for these numbers.
Mhm.
But, it's not just about activating the initial product we asked for. We have to stay engaged, and we have to stay engaged digitally, because, what a lot of people are used to is people coming in and out of branch. And, the next time the household needs they're looking to buy a house, or they're looking to buy a car, they're waiting for them to come into the branch. And that's just not happening the way that it used to, because community banks are, set up to serve their communities with the types of products, financial products. They need to add this digital engagement component, where some of the challengers aren't there yet with some of these other services that make for a true holistic banking relationship. So I think that adding the digital engagement component is just a must do, and it's one of those big wins for traditional community banks that can really take them a long ways along a longer path towards digitalization. Because, like I said, we're behind on the tech side, and there's a lot of work to do. But if you were to identify some low hanging fruits, digital engagement is definitely one of them, which is why.
And you got a lot of partners, right, on the vendor community, which
Mhm.
tells you something important. The vendor community sees, look, we want to get engagement and usage. That's typically the pricing model, right? I can't win unless my customer wins, the bank, right? And so they bring in Ted to help them get that engagement so that they can actually get their products used, right? The end customer of the bank wins and everybody gets paid. Cool. That's a pretty cool proof point too, right?
Can I play the bad guy for a minute? Let me be the bad guy. Okay. So I'm the banker that's over here going, yeah, I don't want to lose that relationship with these people, right? And we rely on that. When Cindy comes in the bank, we say, hi, Cindy.
Right.
And so we need to have that personal relationship. And this seems like a good way to ruin that.
No, I'm full on with whoever you were just imitating there, because that's one of my points, is that we automated away the relationship with these digital account opening, pushing for that, focusing on efficiency. We've automated away the relationship, which is where the value was. So there is absolutely a way to do this that pairs the digital with the personal. I'll give you an example. We launched one of our digital guides, our digital experiences. You can hit a button and have a video chat your local banker. Doesn't mean you have to physically go there, but you can be talking to your local branch manager or someone else who can be helping you the same way they would if you were face to face in the branch, co-browsing through the process to really help you do whatever's tripping you up, set up direct deposits, start using the mobile app. Again, we can take that same experience that you would have gotten had you walked into that branch and deliver it when someone's sitting at home.
Without having to buy an ATM.
Right. Well,
Yeah.
Good digital extends the people, man. I love that theme.
Yes, but I couldn't agree more. Like, that's what has happened. We automated away the relationship, and the relationship is where the value's at. And if you compare these digital, account openers to the branch openers, it shows in the numbers. But that doesn't mean that, going digital is the wrong thing to do. It means that there is a way to do this that marries the two. And that's where I think there's massive advantages for.
And that's literally but that's the hole you're filling right here.
Yeah.
And I love these moments where you get a chance to say, and that's why we brought him on here today to talk to you guys.
Perfect.
I
man.
want everybody to see these things. We're so passionate about community banking. And I mean, that's everybody but the big four in my book.
Yep.
And if you can bring better, more competitive products that let these guys, there's no doubt. And I think after watching SoFi, everybody should realize the Super Bowl, $650 million. Okay, that didn't just fall out of the sky. So, and what do they want to be when they grow up? A bank.
Right.
Okay, bankers, red alert.
Yeah.
This is your moment, man. When we bring these technologies that aspire to be a bank and want to have your bank charter, that's really what they want to do when they grow up. And if you can incorporate those things while you have a bank charter, rather than put your head in the sand and go, well, I'll figure it out one day. Even if you don't want to listen to us, listen to people like Ted. They've thought this thing through. They've done, I mean, years of experience, all the way back to the Andera experience and carrying that forward here. You know, new account opening, you know, the onboarding process, you know, the completion and what it looks like. What would you say would in your process, you know, where's that declare victory moment where I've got this guy and he's happy and I'm getting a great relationship and he's fully digitized and
the key boxes
you know,
to check.
he's a robot, he's a digital guy now, right? Okay. Where would you call that moment? What do y'all see victory as?
Benchmark.
I think it's really when that person is turning to you for the next one. And that could take some time because you can't, you know, that's about being considered when another need comes up, another financial need comes up in the household. So when that moment happens, now you know you've really done your job in cementing that relationship. But there's a lot of proxies for that along the way and a lot of good proxies. And some of those really good proxies happen within the very first 30 days of the initial transaction, carrying through on that initial intent. And, you know, checking accounts is the easiest one to talk about. It's, of course, a very recognizable household relationship account. And, you know, you're looking for proxies like this person's paycheck's coming in. They're using this to spend money. That means either they're using the card, bill pay, more so these days, putting the card on file at Amazon, Hulu, Netflix. So when Netflix bills this user, is it coming off out of your account or somebody else's account? So those, I think, are really good proxies for that true goal, which is, all right, when this person needs to buy a car, are they coming to us? Or are they going to think about us? And that would, when I would say you could really declare victory in terms of, yes, this is a really good, true relationship. We did our job well for the first product they came to us for. And I do think that's one of the pitfalls of onboarding is that people start selling right away. You know, you asked for a checking account. Would you like an auto loan? Would you like a mortgage? Now, I asked you for a checking account. Shut up. You know, like help me use the product I just asked you for. So, and a lot of that happens because of the way that incentives are set, you know, and the way that the old tactics used to be, which was the old tactics was like getting people on the phone. And it was so hard, man. If you were that banker, you maybe got someone on the phone 1 out of 20 times. And you were so excited, you went right into, oh, can I get you a credit card? Can I get you an auto loan? Yep. So you kind of train the users to not listen or not take this as helpful advice or helpful, you know, reminders. So we got to break those habits, really look at the big picture of serving, you know, helping them use the product that came to you first, and then being right there, staying engaged, being right there when the next opportunity occurs.
Proving it. We talk a lot in our shop about positive balance, right? Well, old sales term, let's say, but people are too salesy, I think. They don't provide enough value. From our side and with our team, it's like, I don't want to give away the farm, obviously, right? But whatever somebody needs, if we can give them something, get them fixed up, do some favors, just take care of people, it's not really any major sweat off your back, right? What's $1 here and an hour there? Not a big deal. But you end up reaching a point and having a relationship with somebody that now you can go ask for a little bit of time or let me pitch you on this thing or something. But when you have no relationship and you don't have a positive balance, kind of they owe you one, and you just call somebody up trying to sell them something.
You're actually hitting
kind of
on one.
rude,
This is like one
right?
of my passions in life. I'm a data guy, man.
Yeah.
And people have like discovered data finally inside of a bank. And it's like, boy, look what we can do with this. And it's like, I tell you what you can do with this.
Careful.
You can screw it up.
Yeah.
And to your point, man, I'm trying to sell this guy when he's still trying to put in his money, right?
Yeah.
I mean, like, easy, buddy. And to your point, I don't want to be, I know when I'm being sold to. I don't want to be sold to right now. I didn't come here for that.
Mm-hmm.
And what you see, everybody in banking, if you were in banking in 1968,
Mm-hmm.
you know,
Like you were?
Good. I was little. I was very short.
Okay.
I was a little banker.
Okay.
But everybody gets the idea that, you know, it's like capture them when they're young, right? And if you get that relationship, that's why you want people to bring their kids in and set up a passbook account in the old days, you know, a Christmas account, so that we can kind of get these guys in here and get them started. It's the same theme that Chime hit into of let's go to the college campuses and get these people. You won't believe this, but 10 years later, they're not in college anymore. And they're actually making probably $100 million and they're your preferred client. So when this client move happens through the person's evolution in life, there are customers that are going to be losers for you as a banker, and then there's customers going to be highly profitable for you.
Yeah.
And you'll find the customer that wants convenience more than pricing. If this digital relationship that you're talking about that you've created with me as a consumer through your bank, and I go to this relationship when I want an auto loan because it's so easy for me and everything else I've done, I'm not shopping down to the 5 basis points to figure out whether I'm going to book the loan here or go to the credit union. I'm going to go with you just because it's easy and I'm cool here and I know these guys take care of me and it's a great relationship and simplicity and saving me time. Meet a person over 50 that doesn't tell you the number one thing that they wish they had more of. It ain't money, it's time. And that's what you guys can actually pattern that behavior and not kind of take data from the bank CRM and then go out there and sell the hell out of people. In fact, you're using it in a completely different way.
Sort of the opposite. Yeah.
It's brilliant.
Right. And, you know, but those relationships are so valuable. You know, like you tell a story about how a lot of them originate, they're passed down within the family.
Mm-hmm.
You know, if you pull out over someone on the street and say, let me see your wallet, and they pull out their bank card and say, all right, why do you have this bank? I promise you, I'm going to say 8 times out of 10 says, oh, my dad went there, my parents banked there, so that's why I've got this bank.
Mm-hmm.
Like that is 100% the way it happens. But it's time for us to double down on those relationships. You talk about the ticking time bomb in terms of SoFi or the others. They want to be a bank when they grow up. And they have massive Super Bowl commercials. They have massive budgets to take these relationships away. But the community banks have the relationships. So they're theirs for the taking. And that is the comparative advantage that community banks have. And it's a huge one. I don't think we can overstate how big this advantage is.
Well, have you ever tried to take another guy's girlfriend?
Yeah.
A lot better when she's your girlfriend.
Yeah. Rather play
That's right.
defense, man. Yeah. Yeah.
So we have to double down on it, you know, have to catch up on the tech side, the user experience side on very basic things like mobile banking and online banking. There's still plenty to work to be done within community banks in that space, but then also start thinking about other, you know, FinTech products to bring to those relationships, so that they don't go elsewhere to fill those needs, to fill those desires.
Mm-hmm.
So it's a little bit of a new way of thinking about it. You know, a lot of community banks, kind of the last new product they brought to market was like a free checking account 30 years ago.
Right.
Like that's not, can't think about free checking as a product anymore.
Well, I've got some notes here.
And the way we think about products and develop that competency to continually bring those new services to our relationships and nurture this gold mine that exists within community banks.
Spot on. You are spot on. I've got some notes here. I wanted to ask you 2 questions. One of them is exactly what you're talking about. What products do you see in the marketplace today as those new products that the bankers, just to say across the board, every bank ought to be really focused on this in this area. What would you say is a good product area?
There's a couple ones I love. The ones that come to mind are frankly small business oriented, because I think the small business segment is so great for community banks. But I love, for example, Z Suite, the product that kind of spun out of Leader Bank.
Nathan?
I mean, this is the kind of stuff we're talking about. Yeah, Nathan and Jay Tooley over there at Leader. But they built a product really specifically served for landlords. This is a really valuable segment, and these are the kind of things banks really should be thinking about. Not just a checking account, free checking account compared to the other maybe fee-based checking account. No, this is an innovative product that really helps you run your business as a landlord, collect deposits, manage the whole process. And that's going to bring them to your bank and make them really appreciate you. And then the second step to that is that competency to now that you have this product, to really bring it, through the digital engagement process. You can't wait for people to come into the branch and ask you for it. They don't know about it. They don't know it exists. You can't just print out brochures and hand them out when they walk in. Another one that comes out, I love Autobooks. I love what Autobooks is doing. No reason why a small business owner shouldn't be able to send and collect invoices right from their bank account. There's no reason we should be chasing them away to a third-party solution to do something like that. Yep. So those are a couple ones that I love. There's a lot of other ones out there. I mean, this is like a golden age for FinTech.
I think so too.
Yeah.
Hey, high five.
High five. There's so many cool ones out there that serve unique segments and unique needs. And that really, needs to be the product strategy moving forward, rather than, just sort of trying to beat the checking account to death. Like, I don't know how many, people point to, you mentioned Chime earlier, they point to Chime's like product innovation with the 2 days early, getting your deposit, your paycheck 2 days early. That's not new. Banks have been doing that for years. They just, the tech was better and the marketing budgets were huge.
Reminds me of at least 10 years ago with real-time posting of checks, and there was a big push in credit unions. And even then, this isn't a brand new concept, so I'm with you.
Yeah, but again, I'll give them credit because they did, there was a job to solve there. There was a clear need for, individuals who could have use for their paycheck 2 days earlier. And they did a much better job marketing it than other people who had that product out there.
There's a lot in payroll and direct deposit and redirect, and a lot of the things like Atomic's doing is some good stuff. There's a lot of cool niches though. And I think to your point, the conversation is rightfully, in my opinion, shifting from sort of the macro platforms. We're not talking about you need this wonderful, crazy, all-inclusive core or online banking or LOS. It's almost the topics of the day or things you never really thought of. And it's these cool little companies like TED, right, that have some neat experience and found something that's got a heck of an ROI, right? And it's a nice, easy niche that you can go in and really make up around the edges.
That's
a good comprehensive strategy.
No, I really like this conversation, man. I tell you what, I could talk for 3 hours. We will next time we hang out.
Hey, we'll see you too, man. I'll give you final thoughts. What did we not cover?
Frankly, what we didn't cover is I think the tech side got taken over by the value extractionists of the world. And that maybe is a topic for another call. But us technologists, people who are creating value, not just extracting value, really need to step up our game. Because frankly, I think we've let our banking partners down over the past 20, 30 years.
And there's a topic that every consultant, thought leader, journalist, and I just beat it to death, but they will start off a topic by saying bankers must, right? I hate it. And it's to your point. Bankers must something they don't have control over, right? And it just doesn't make any sense. And so to your point, I think it's the tech and FinTech must help bankers do X.
Hey, there's one for a change.
Right? Yeah, let's put the onus back on ourselves.
Let's get the technology people to must.
Yeah, there you go.
Yeah, man.
There you go.
Hey, man, I'll tell you what, I can't tell you how much a pleasure it was to get your thoughts and have you get a chance to talk to all the bankers. we put this whole thing in Bankers Helping Bankers, and that's like every bank in the country practically going to be able to see you and see your pretty face and get to hear all your words of wisdom. And you have a hell of a lot of it, man. And I appreciate you sharing it.
A
And
lot
I
of
appreciate you
experience.
riding with the Cowboys.
I love you guys. This is so on brand for us. So happy I finally got to ride with the Cowboys.
Hey,
Awesome, man. I can't wait to see him in his
you in-
caracter cowboy hat.
see you in 2 weeks, man.
Cool.